What is good, YouTube? It's your boy Sean, known online as Sensei Trades or Sensei underscore on Instagram. Don't forget that X. I am a 7-year experienced day trader, six-figure prop firm trader, and I have recently become a hedge fund asset manager, bringing my talents to YouTube to show each and every one of y'all how to trade in a simple yet effective way. As promised from my last video, this is going to be a full-blown dedicated video to my trading approach. So my trading strategy in the flesh, right? Now, I've went over my strategy in the past, but I haven't actually broken each piece down step by step in its own video. So that's what I'm gonna be doing on this one. Stay tuned for my next video, which will be my official start of my podcast called TikTok, TICK Talk, where I'm gonna be discussing everything from the economy to just full-blown money. You feel me? But without wasting any more time, let's hop into TradingView and let's talk about SKC. One quick thing before we begin, let me throw this disclaimer out here. I personally do not believe that your strategy is the reason that you become profitable. What makes you profitable, and I will say this in every single video, is your ability to manage your risk. Your strategy is there to build your risk plan around. All right? The markets are not manipulating your stop losses. Let's just kill that argument here. The markets is not being manipulated by some big bank or some algo that some guy created, quote unquote. That's just ridiculous. There's too many players in the game. There are millions and millions and millions of traders from across the entire planet. It is illogical to believe that one person, even a group of people, created some algorithm that could tell you exactly where the market is going to go. If any of that was true, we would see people out here with 100% win rates. And I'm talking about for an entire year. You did not lose a single trade that entire year. That's impossible. Stop listening to these gurus on the internet try to tell you something that's not real. They're lying to you in order to sell you a course. That's why every time their video is done, they gotta shove sales down your throat. Click the link for my paid Discord, buy my course, sign up for my mentorship, join the waitlist. This is why. They are just trying to sell you something. They can't trade for real. Tell them to show you a long-term P&L. Tell them to show you a dashboard of any sort that proves that they are who they are, that proves that whatever algorithm they're talking about is real. They can't do it. Only a small handful of people on YouTube can actually do something like that. And I guarantee you it's not the ones that are talking about some algorithm. All right? Manage your risk. Keep things simple and manage your risk. You'll be perfectly fine. All right, let's roll. So here we are on TradingView. So what I got pulled up for y'all right here is how the markets are going to move 24/7, 365, right? All the markets are going to do is produce highs and lows. Nothing more, nothing less. Not some algorithm hunting stop losses. Not no big bank staring at all of your stop losses and thinking, oh yeah, we're gonna hit those. No, none of that, right? Just highs and lows. When price creates these highs and lows, it's going to break previous highs and lows. It's all highs and lows, right? So let's focus our attention to the left side. Price created highs, lows, and more highs. But since 1.133 broke 1.119, this is an indication that price is going up, meaning that we are in an uptrend. All right, you always want to follow the trend. So because highs are getting broken, that means that we are on our way up. So the terminology we are going to use is higher highs and higher lows. We do not want to see, in an uptrend, we do not want to see lows getting broken, right? So we got highs, lows, more highs, broke previous highs, so the uptrend is still valid. But now this is what I mean by we do not want to see lows being broken. So we got more highs, we got more lows, but oh look, 1.149 failed to break above 1.154. And then it proceeds to break the low at 1.138. The break of this low in the uptrend was our indication that price is now reversing and is going into a downtrend, meaning that when highs or lows are created, it is now breaking lows. When we see highs being broken in the market, you want to look for buys. When lows are getting broken in the market, you want to look for sells. Just that simple, right? So now, how do I enter the markets? Well, I'm gonna have to break down SKC. All right, so now that I gave you the fundamentals and the foundation of how the market moves, I am now going to give you my personal context behind my reasoning of why the market moves. So the market moves in two phases. You got the push and then you got the pull. The push is the move that breaks structure, and the pull is when price comes back to try to recover some more liquidity to continue to go in the desired direction. So I take advantage of this by using my 3-step entry process known as SKC. Structure, candle, corrections. Now, why do I have a K when candle starts with a C? Answer simple, because it's mine. So if you see anybody else with a K, spell candle with a K, you know they're stealing it from me. But step 1 is everything I just taught you. We want to see which direction the market is going. So you're going to ask yourself, is price breaking highs or is price breaking lows? So again, we're just going to stay here on the left side. Obviously, since we are in an uptrend, price is breaking highs. So we identified our structure right here at 1.119. So that's step 1 done. Step 2 is candle. This part is probably the most complicated, but it's not even complicated. All you're doing is identifying the push that broke structure. So for this example, just focusing, pay attention to this right here, right? Just focus on everything within this box. So the push that broke structure was this move right here, right? So now we have to measure that push. And we measure it, by using our Fibonacci retracement tool. Now, when you first activate your Fibonacci, it's going to look like this, a bunch of blubber. I absolutely despise the original Fibonacci retracement. But just to give you a quick little history lesson, the Fibonacci retracement originally has nothing to do with trading. It was created by a guy named Leonardo Fibonacci way back when in history. I want to say like either late 1800s to early 1900s. I don't remember the equation itself, but it's basically the equation of a spiral. When you do the Fibonacci equation, you somehow get a spiral. And at some point in time, somebody took that and went trading. Now here we are. But I personally believe since it has nothing to do with trading, it doesn't make sense to apply it with trading. So I add my own little stank on it. Boom. And as you see here, when you measure out your move, you get your entry criteria. So let me bust out the settings real quick. So you got the fib here on the left, settings here on the right. It's just 5 levels. You got your 0 level, your 0.25, your 0.5, your 0.68, and your 1 level. Now, as you see by the labels, your 0.5 and 0.68 are your entries. Your 1 is your stop loss, and your 0.25 and your 0 level are your take profit 1 and your take profit 2. So now, why did I choose this setup specifically? And it all goes back down to your risk management. Because check this out. If I enter at my 0.5 level, right, and I just line it up with the fib, stop loss is here, take profit is here. I will always set myself up to get a 1-to-1 risk to reward ratio. And now, for the sake of your risk management, whatever it is you are risking, you always want to look for that same amount as profit or more. So if I take my entry off of my 0.5 level, you can either take profit at your 0.25 or hold it to your take profit 2 to get that full 1-to-1 risk to reward ratio. But now, say if the market goes against me, right? That is what my second entry is for. And if you enter at the 0.68, you will always get a 1-to-2 risk to reward ratio. If you are aiming for take profit 2, take profit 1, you still get that 1-to-1, right? So this first entry is to get into the markets, while the second entry, if the trade goes against you, is to help you average back out. So by the time, let's say the trade goes, so you identified the push, boom. So you tapped in here, price went against you and tapped you at your 0.68. By the time price pulls back to your 0.5 level, this little bit of profit either pulled you back to break even before it made it here, or by the time you made it to your 0.5 level, you are already in profit. So now all you have to do is let the trade run. And after that, it's history from there. In the simplest of terms, this is just called a break and retest strategy. Every trader is going to trade a variation of what we call a continuation or a reversal. Continuations, let's go back to our chart here. Continuations is when you decide, say in this uptrend, the moment price broke 1.119, you took your buy right there. That was horrible. You took buys right here, and then you just caught it on its way up. Now, there are some traders out here that can catch the breakout and be profitable with it. But me, That's not how I rock. I prefer to wait for the reversal, or in other words, the retest of price, to try to catch the most accurate reversal as I possibly can. And that is where the fib comes in. So now we're going to take this and line it up with structure. So you're going to take the Fibonacci, make sure you got your settings, and in the uptrend, you want to draw it from the unbroken low to that newly formed high. Right? Boom. So here we go. We identified step 1, which was our structure. And now we identified step 2, which is our candle, or identifying the push. So now we have our trade set up. So now it's time for step 3, which is the correction. And the correction is just a fancy word for wait for the retest. This is nothing more than a break and retest strategy. Ever since I started trading, I have traded nothing but support and resistance, breaks and retests. Just giving you some backstory here. But last year, I was primarily focused on the NASDAQ 100, and it kept barely tapping my stop loss before going in my desired direction. So I was wondering, how can I avoid getting stopped out too early? And that is where my fib came to life. That is how this fib was born. So let's get rid of some of this, just so we got a cleaner chart. So now the correction is simply waiting for that pull to enter at one of our 2 levels to continue in my desired direction. So here, put your stop loss where the fib tells you, and put your take profit where the fib tells you. And that's it. This is my entire 3-step process: structure, candle, corrections, break, retest, enter. Simple, right? So let's do it for lows. Let's do it for sells. Let's bring this over here. So now step 1, structure. We got lows broken here at 1.138. Candle, identify the push and line that up with your fib. So our push is here. So we're going to draw our fib from 1.149 down to 1.126. Had a little brain fart right there. You can stretch it out a little bit if you want, just so you can see a little better. And then step 3 is the correction. So price is going to pull back, enter me in at one, if not both of my levels. Line your levels up with the fib, and the rest is history. All right. So now let's go down to an actual chart so we can see how to actually do this in the live markets. Now I started my journey as more of a swing trader, but over the years, I have been able to handle more faster time frames, I could say. So I have transferred to more of an intraday approach, but I'm still down to let my trades swing. So if I can take my profits within the same trading day, I'm gonna do that. But if the markets are playing and I need to hold my trades for longer, I'll do that as well. So we are going to pay attention to right here. And we're just going to do everything we just did. So just follow structure. Read it from left to right. And You can identify the pivot points when the market switches, and I mean switches hard too. So a little pull like this may not be what we're looking for. But something like this, now that is structure that we can identify. So we got highs, lows, highs, lows, and highs. So just staring at this right here, just looking at it. Where's my 3 steps here? Let me grab that real quick. Yoink. Bring this back for y'all. All right, so looking at this schematic right here, let's identify our 3 steps. Were highs or lows broken? Give y'all a couple seconds. If you said highs, you are correct. So you could say right there. Step 1, done. Next is step 2, candle. What was the push that broke structure? It was this move right here. This was the push that broke structure to let us know that price is continuing in an uptrend. So let me draw the low for y'all. Right there. At 1.023. So price broke highs at 0.027. We got our lows at 0.23. So you're going to draw your fib. Step 2. From that unbroken low to that newly formed high. Like this. I'm going to switch everything to the left here. All right, so you can already see it playing out. And then step 3 is the correction. So once price created new highs, let me just mark it for y'all. Once price created new highs at 0.135, that is how we knew to set this play up. So after that is just step 3, waiting on the correction to continue in our desired direction, which we got on this singular candle. So it entered both of our positions. So we got entered at our 0.5 level and our 0.68 level. But all you gotta do is line it up, and the rest was history. This is how I set my trades up every single time. Will you lose trades? Of course. But that is why your risk management is there. This setup can always fail. It's going to have moments where it fails, but it's going to have moments where you're going to catch some of the wickiest entries of your life. I'm talking about it's going to tap you. You're going to see one of these big old wicks go in your direction, and this is going to keep flying. Right? But that is why risk management is so crucial, because you don't know what's going to happen until it happens. Everything can go wrong very quickly, no matter what setup you use. So your risk management is there as your safety net. All right. So let's find a sell setup, right? Here we go. We can keep it short and sweet. Just look at this right here. So we're going to read the market from left to right. So we got a strong support level here. So all of this, but we're going to start here. So from lows to highs to lows to highs to lows to highs to lows. Bring this up. So just looking at it, we can see that lows are getting broken in the market. So this means we are going which way? If you said sells, you are correct. Right? So now it's just all about going through the process. So step one, you can really grab any of these lows here. I'm just going to do this right here. Boom. So that's S. Identify the high, which would be here. Cool. So now we draw our fib from this unbroken high to the newly formed low and stretch it out. And look, you got a perfect entry right there. Line your fib up, line your levels up with your fib, and the rest is money. This is how I set my trades up every single time. I hope you learned something from this video. Please give me a like and subscribe. If you want to join my Discord where you can talk to me directly for free, it's also in the description below. Hope you learned something, and I'll catch you in the next one. Until then, may the bag forever runneth deep. See y'all later.